All right, welcome back to the channel, Crypto Trend Trader, and today we're going to be taking a look at why it's so important to do your own due diligence. So it's no secret that in the world of social media, that oftentimes the amount of followers or shares on a tweet or some other post are directly correlated to the credibility that people give you. But it's very, very important to still do your own due diligence, and specifically when it comes to statistics. That can obviously been made to mislead you or pitch a certain narrative or reinforce that narrative. But oftentimes, even those statistics are not true if you dive in. So I want to encourage everyone to do their own due diligence. So today we're going to be taking a look at a specific tweet from a Bloomberg contributor. I was shared on a very popular podcast, Animal Spirits, one that I enjoy myself. But again, we're going to take a specific look and see, did these people do their due diligence? Are the statistics being misleading, or are they blatantly false? So here we have the S&P 500 chart, SPY. We're going to take a look at this. But first, I do want to pull up this tweet and take a look here. So again, this is screenshotted from the Animal Spirits podcast, number 270. It's YouTube. I guess it's really more of a vlog slash podcast. But Animal Spirits, if you haven't checked it out, is very popular. It has Ben Carlson and Michael Batnick, and they work actually with Josh Brown, a popular CNBC contributor as well. They provide quite a bit of content, which is typically useful, but like anything, needs to be double checked or fact checked, I guess is the word for it these days. So let's take a look at what this gentleman, Connor Sen, had to say. And keep in mind, he is affiliated with Bloomberg. So you would think that that would give him some credibility. So it is fun that we can now say something that's never happened before is going to happen. So we can assume from that statement that he is about to list two different things that have never happened before. Either we get inflation down from elevated levels without a recession, or a 50% retracement of major bear market sell-off goes on to make new lows. So you have to decide which it is. So if you are new to the channel, I highly recommend that you go back and take a look at the inflation video that we did, essentially talking about every time we see a recession, inflation and yields and how they're all linked together. And you will find that actually this first portion of the tweet is in fact true. We have never brought down inflation from elevated levels without a recession. Now, granted, using terms like elevated levels, not necessarily the most reliable, as it's not like a quantifiable thing. Using the word elevated doesn't really give us a specific example of what to use. But again, we've already taken a look at that, already kind of like revealed what there is to be there. So we're going to focus on the second portion of the tweet here. So we will assume from the research that we've already done, the due diligence that we've already done, that portion is true. Next, we have the second part of the tweet, which is a 50% retracement of a major bear market sell-off goes on to make new lows. So essentially, what he is saying is we go down X percent, let's say for instance, 20%, and then we have a 50% retracement. What he is saying is essentially we would go back up 50% of the move down. So if we went down by 20%, we would go back up 10%, which is 50% of the 20% that we lost. So obviously we use Fibonacci tools. We can measure that, and we're going to take a specific look. But the part we're focusing on here actually right now is, he says, from major bear market sell-off. So there's not really a quantifiable number there. He says 50% before that, so that's obviously quantifiable. But major bear market sell-off isn't really quantifiable. So we know that the Wall Street definition of a bear market is a 20% sell-off from peak to trough, basically. So once you've reached a 20% down market, you can confirm that you're into a bear market. So we will assume that what he is talking about is a 20% sell-off. I would say that is pretty major. But again, it's not a specific number. So we'll actually take a look at 20%, and then we'll look at one that's 30% as well. And we're just going to go ahead and fact check this. We'll give Connor the benefit of the doubt that he has already fact checked this. We will, of course, give Animal Spirits the benefit of the doubt that they have also fact checked this. But like always, we'll give you the benefit of the doubt right up until we double check it for ourselves. So that's what we're going to do today. We're going to take a look at this and back check that. So he says markets, does not specifically say which markets. He says major bear market sell-off, does not specifically say how much a major market sell-off is. But what we're going to look for is basically, did we have at least a 20% down market? Did we then retrace at least 50% of that move down and then go on to make lower lows? And we know that if we can find even one example of that, that in fact Connor is incorrect, and this is basically misinformation, disinformation, or just full-on, laziness, whatever. So let's take a look here. So here we have the S&P on the daily, and this is our recent price action. We're going to go ahead and zoom out here, and we're going to look at the monthly. So it's very easy to see key areas that we should focus on. So in this case, the SPY chart goes back to 1993, and then obviously to 2022 present. And we recently had a large sell-off, and then we have retraced that 50%. So we're going to take a look at that. But again, we're going to give him the benefit of the doubt, but we're going to take a look for ourselves just to make sure. And then that way we can see, okay, are these being skewed? Are these facts? Or is this a blatant lie? Well, we'll find out very soon. So obviously what has prompted this is the most recent sell-off. But we can see, looking at this chart here, that there's probably about 5 key areas to look at. Obviously, the most recent move, and then we have the Rona dump as well. And then we're probably going to want to take a look at like 2011, 2008, and 2000. So we have like 5 key areas that we want to pay attention to. So let's start right here with the recent price action on the monthly. And just like Connor said, what we're looking for is we're going to pull up our Fibonacci retracement tool, and we're going to do an internal retracement. So essentially from the peak right here all the way down to the most recent low. And then what we want to do first is we want to make sure, did we actually go down by 20% here, so that Connor can officially call this a major market sell-off. So we obviously know the answer to that because everyone has declared that we're in a bear market. So here we see a 24.49% downside, so 25% downside, which we would consider to be a major market sell-off. And then after that, did we retrace 50%? So using our Fibonacci tool from the peak to the trough right here, we see that a 50% retracement would have taken us to $417. So we did in fact get above that. We actually made it exactly to the 618 Fibonacci retracement. So we actually retraced 61.8% of that move. So the idea is what Connor is essentially saying is, from this point on, never have we went on to make new lows. So let's just assume that the top is in for now, and we're going to come down here and back test this. He's saying that the absolute lowest we can go to is the previous low, because we have never went below that. So one of these two things is going to happen for the first time ever. So obviously he's saying we will not go on to make new lows from here unless we do something we've never done before. So before we start trying to figure out which one of these two things that we've never done before that we're going to do, because those are obviously, he's presenting it as if there is a choice A and a choice B. One of those two things is going to happen, and neither of those things has ever happened before. So obviously, let's go through first and just make sure that these things have never happened before, and then we can go on to make our point or decision or whatever after that. So let's go ahead and switch now to our weekly chart so we can just get a little bit closer of a look. So here we see again from the peak to the trough, and then a 61.8% move. And again, Connor is saying that we will not go on to make new lows without doing something we have never done before. So now let's just double check and make sure that that has never happened before. So here we have that 2020, the Rona dump right here. So we can see, not really some clear pivots along the way. We basically had, because the moves were so violent, again, I'm just going to switch to the daily here. So we need to look for key pivots along the way. And it's pretty clear here. We'll start with our measuring tool. So we're going to go from the peak right here to the trough. Did we go at least 25% down? Yes, we went 35% down. So now we want to look for a swing that we basically come down to and then bounce and then go on to see, do we make new lows? So because of the violence and, the nature of this dump right here, it's a little hard to pick out. But essentially we have the peak, we have a trough right here, and then a bounce. And then from that point on, we don't really have another one. Just because the moves were so violent and so quick, and then the recovery, it's very hard to actually break this down. But let's just say this one here, the first little move down, was only 15.75%. So we're not technically in a bear market till we hit 20. So we'll say that that's obviously not going to be a viable choice. And then after that, there's only really one other bounce, maybe from around this area, that goes on to make new lows. That was 26% downside. So arguably we could say, okay, to this point right here, that would count under the bear market and major market sell-off. So from that low right there, do we bounce back 50% and then go to make new lows? We do not. So far it looks okay. So again, we'll just kind of zoom back out here and keep on going. And then we see a pretty decent one right here, but we know, that's not quite going to do it. Again, 2018, we see the initial move down is only 12%. And then after that, we come down 20%. But then we know we don't even make new lows after that. We actually make new highs. So obviously, we can rule that one out right away. So far, so good. Looks viable. Let's just go ahead and zoom out here and just kind of look at some of the other bigger ones. So obviously 2008 and 2000 are some key levels that are worth paying attention to. So let's take a look at 2008 next. So the important thing again here for 2008 is we just want to go from the peak right here all the way at the highs and then, look at some of these swings. So here we see a 20% down right here. So that automatically qualifies right there. We've made it 20%. That is a major bear market sell-off. So then now we just want to do the same thing again. We'll just kind of zoom in on this area. And we're just going to see with our fib tool once again, if we take from our peak right here to our 20% down market, and then we're just going to spread it out there. What we're saying is, do we go back up 50% of that move? Uh-oh. But here we see we actually do. So if we just double check this one more time here, from our peak to our trough, we go down at least 20%. So that is a major bear market sell-off. We're confirming into a bear market. We've sold off at least 20%. And now Connor is saying never have we went on to have at least a 50% retracement of that down move, followed by putting in new lows. But here we can see once again, not only did we take out the 50% retracement, we almost made it exactly to that 618. Very, very similar to what's happening in price action right now. And then from that point in time, not only did we go on to make new lows shortly afterwards, we actually went much, much lower. So if you were to just blindly believe Connor, let's say he put this tweet out back in 2008, if you were to just blindly believe him and you thought once we got up above that 50%, there was no way we could go lower because it's never happened before, or if we did, it would be the first time something ever happened, so the probability of it would be highly unlikely, we actually went on to lose another 53.5% of our value. So if you listened to Connor back then and decided, oh, well, we've never done this before, so we're not going to do it this time, you would be down 53%. So here is this very, very clear example of Connor being wrong. He's 100% wrong. Not only do we go down that initial 20% and then have a 61.8% retracement, we then not only went on to make new lows shortly afterwards, but we went on to make substantially newer lows over an extended period of time. So we know now that Connor is wrong. So the real question is Connor malicious in intent? Is he just lazy? Did someone else tweet this and he just stole their tweet and copied it as his own and didn't verify it? Well, we don't know. I'll assume that he doesn't have any malicious intent, but anyone with, any basic knowledge would immediately probably look at 2020, the Rona dump. They would probably look at 2008, the global financial crisis, and they would look at 2000, for the dot-com bubble burst. So it seems like anyone, with any knowledge of these markets would immediately just check those levels. So let's check 2000 and just see something here as well. So here we see a 30% sell-off to a major market swing right here, and then a nice bounce afterwards. And then we see another sell-off after that, a nice bounce afterwards, and then obviously we go to new lows as well. So if Connor was here right now and had the opportunity to defend himself, perhaps he would say, well, 20% is a bear market, but it's not major. It has to be at least 30% for a major. So we just looked at the 30%, and that was actually down to here. So let's just see, assuming that was Connor's defense, we'll give him credit and we'll just double check it. We'll just do our due diligence. So again, let's take a look at this move here. So from the peak right here in 2000, the dot-com bubble burst, to the low right down here in 2001, March, we have 30.92% downside. So is it a major market sell-off? Is it a bear market? Bear market is over 20%. Major market sell-off, we're assuming, is 20% or more. In this case, we're going to give Connor the benefit of the doubt and say, well, it has to be at least 30. So here we've sold off 30%. And then from there, from the top to the bottom, we retrace over 50%. So we went above the 50% mark. And then Connor is saying we have never went on to make new lows. And yet here we are at new lows. And then shortly afterwards, we have another bounce as well. And then again, we go on to make new lows. So again, we found a specific example in only a couple of minutes of Connor being wrong. And again, if you just assumed that what he said was true, and you went long right here and said, well, that's it, we've never went on to make new market lows, again, you would be down another 41.5%. So here we have found in only a couple of minutes two specific examples of the market going on to make new lows immediately afterwards, contrary to what Connor had said. So again, now we're in this situation right here where the reason he has tweeted this out is because he's saying we have already sold off 20% and confirmed into a bear market. We have already bounced up over 50%, in this case 61.8%. So if we were to go on and make new lows from here, we would be doing something that we have never done before. But we have just looked at two specific examples of where we have done that in 2000 and 2008. So let's just pull his tweet back up again and look at it. So it's fun that we can now say something that's never happened before is going to happen. So again, his claim is that we have never done either of these two things again. So we're going to skip the first point. We've already looked at that in a different video. I highly recommend you go ahead and check that one out prior to him even tweeting this out. But the second little bullet point here is a 50% retracement of a major bear market sell-off goes on to make new lows. So you have to decide which of these things has never happened before. But the problem is that in just a couple of minutes, we have went through and we have basically debunked Connor's tweet right here. So just in a couple of minutes with some free tools and basic market knowledge, you too can go through and verify, do your own due diligence. Because this right here, this narrative is already being repeated on mainstream all over the place, not to mention that it's only going to get worse. As the longer we stay at these levels or the more we go to the upside, the more this narrative is going to be pitched and essentially build confidence in people, cause FOMO that, again, we will never go on to make new lows because we've never done it before. And if we do, the probability is extremely low because of all the years in the markets and all the downtrends. We've never went on to make new lows after the 50% bounce. So obviously we have proven that that is not the case. So now that we have that 61.8% bounce, which I have been calling for, obviously we called for the bottom right here and we have called for the top right here, and we traded the range on stocks, cryptos, all types of risk assets. So now here we are at the take profit levels, essentially threatening the bear market to potentially flip back into a bull market. And then we're seeing bold claims like this to help build confidence and build FOMO in people, but we've just dispelled them and shown that they're not true. So again, it's very, very important to do your own due diligence. In the age of social media, we literally see people posting articles without even reading them and literally just going by what the title says. And then you click on the article, you have a look, and it has nothing to do with what the title says, or right inside the actual article itself, it proves wrong whatever the narrative that someone is trying to push. In this case, all we have is a tweet and a chart, and we've gone through and done our own due diligence, and we know that unfortunately Connor, again, we're going to give him the benefit of the doubt that he's not sending out a malicious tweet, but he is in fact sending out a false tweet, misinformation, disinformation. It's not even a situation where he could massage the statistics to make this true. It's blatantly false, because not only do we have a 20% move down, followed by a 61.8% move to the upside, and then go on to make new lows over 50-something% lower, but we also had a 30% downtrend followed by an over 50% move back to the upside, and again go on to make over 40% lower lows. So please do your own due diligence. You don't have to listen to me. Anything I say obviously is subjective as well. Go ahead and verify. If you don't believe me, do it on your own chart. Highly recommend that you do this. We work very, very hard for our money, so you should work just as hard to make sure that you keep it as you did when you got it. And I promise you right now, I can't tell you are we going to go up from here or down from here with certainty, but what I can tell you is that that tweet, what Connor said, is not true. And that is a mainstream narrative that is being, projected all over the internet, reaching hundreds of thousands, millions, hundreds of millions, even potentially billions of people could have access to something posted on the internet, and it will just be shared on, big podcasts, YouTube channels, mainstream media, as if it is factual. And I promise you, I am not the first person with internet access that has ever seen that tweet. And yet for some reason, I am the first person that's ever verifying it. And the truth is, I have verified it, and it is in fact false. It's misinformation, it's disinformation, and we have proven that it is in fact not the case. And the two most similar times in history that we have seen this situation play out are the closest times to what we have right now, which obviously is the global financial crisis and the dot-com bubble burst. So here we confirmed into a bear market when the 200 exponential and simple flipped bearish, and then that situation took place. We see the 200 exponential and simple are red. Again, here we see it happen in 2008. And then we see a couple brief moments with our Rona dump here as well. And then, of course, here we have done the very similar thing. We have back tested the 200 exponential and simple. We have had a over 50% move to the upside. And now it seems there is at least a possibility that we will go on to make new lows. And, the claim that we have never done that before is obviously false and incorrect. So if you know Connor, or Connor, if you're listening, by all means, I would love for you to defend yourself. But you are, in fact, spreading misinformation or disinformation. And people like you are exactly what is wrong with our society, because you are using your voice or your megaphone or your microphone to project lies, whether it's intentional or not. Again, I'm going to leave that up to you guys. Also, I am a big fan of animal spirits. I find those gentlemen entertaining, but nonetheless, they, again, have a very, very large microphone or megaphone with huge reach. And when they put out things like this and treat them as if they're facts without verifying, it could be very, very bad for someone who listens to it and doesn't verify themselves. So that is it for today. Just wanted to take a quick look at that and do a quick static video. If you enjoyed today's video, make sure to like and subscribe to the channel. We put out all kinds of educational videos. The goal of this channel is to help you learn, help you to, basically become self-sufficient. And part of that is not only learning how to do technical and fundamental analysis, but also basic things like, we always hear it in crypto, don't trust, verify. Well, that's it. Don't trust anyone, verify. When you see some statistics, take a minute and see, are those statistics actually true? Verify for yourself, and then you can make an educated decision from there. If you did enjoy today's video, make sure to like and subscribe. We do daily live streams. We do live streams 3 days a week, every single Sunday night and Wednesday night from 8 p.m. Eastern Standard Time till about 10 p.m. Eastern Standard Time. And then, of course, every Friday from 11 a.m. Till about 1 p.m. Eastern Standard Time as well. They are absolutely free. Jump in the chat, watch along, take all kinds of asset and chart requests, technical analysis, talk about the overall technicals, fundamentals of not only the U.S. markets, but global markets, crypto, pretty much anything we can do technical analysis on, as well as quite a bit of macro and microeconomic analysis as well. So that's it for today, Crypto Trend Trader, and I'm out of here. And remember, of course, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly.